is higher. So he hasn't provided for that. So this number of 1.6% of GDP is definitely going to be higher if they're accounted for on an accrual basis, not on a cash basis. I'll just give you where urea prices are. You can see the chart of how urea prices. We import urea. We are not able to meet our demand for urea from domestic sources, so we import urea. And urea prices, as they go up, our subsidy burden basically goes up. Now, if you look at the finance minister's projection for fertilizer subsidy, he's expecting fertilizer subsidy to be lower next year compared to this year. Now, how is that possible if the prices of urea are higher? So obviously, he has underprovided for fertilizer subsidy. Look at this other chart on oil. Whenever you look at oil, you have to know at what level of dollar per barrel you are taking for computing these subsidies. Let's assume oil is at $100 per barrel. If it is $100 per barrel, there will be a subsidy loss of around 1,18,000 crores or 1,17,000 crores. The finance minister has provided nothing. Out of this 1,70,000 crores, just as a broad thumb rule, there is a formula for it, as a broad thumb rule, close to 45% to 55% is borne by the upstream and the downstream companies. 45 to 50%. Which means there's going to be almost 55,000 crores of subsidy which has to be borne by the government based on a $100 per barrel oil price for next year, which is not provided in the budget at all. Okay, so that is one aspect you need to note. Just to give you a sense for people who are actually buying kerosene, diesel, LPG, I've shown a negative number. If oil is at $100 per barrel, the government is subsidizing 376 rupees per cylinder, which hits the budget. It is subsidizing 23.5 rupees for kerosene, and is subsidizing about 8.8 rupees for diesel. Now, there are two ways of looking at it. One is that he says, okay, I don't want to bear this subsidy, so from tomorrow I'm increasing my price on diesel by 9 rupees. In which case we remove this, and the subsidy burden will come down. But if he's not done that, then this will have to be provided for by the government in the budget. And there is something called a supplementary budget or a supplementary grant that they normally come out with somewhere in August, which they say, okay, now we have reviewed the numbers, some months have passed, and I'm increasing my subsidy number by X. That will come only in August. Markets are taking it right now. Okay? So that is something we need to note. The thrust on consumption. Year after year, they're doing this thrust on consumption, like I mentioned. They have not increased the outlay for Nariga. That's another underestimate, because now the minimum wages under the National Employment Guarantee Scheme, Rural Employment Guarantee Scheme, is going to be linked to inflation. And that is the CPI inflation for agriculture labor. So they have assumed no increase in the absolute number, which will be going up based on inflation numbers. But the personal income tax rates, there have been a slight change. They have made, an additional exemption. The slab has increased from 1,60,000, which was nil income tax, has gone to 1,80,000. They've introduced a concept of new age for senior citizen, which is now 60 against 65. And they have introduced a new category called the very senior citizen, which is 80 plus years. And they're giving them an exemption of 5 lakhs. So indirectly what they're doing is they're putting money, little money additional in the hands of the consumer. Now look at what he's doing. He's not changing the slabs at the higher rate, at the higher end. The reason being, as inflation goes up, the people who get hit the most are the urban poor. And therefore, if you want to make sure that they, have money to spend, you at least increase the tax slab at the lower end rather than increase it right across. So that's what he's attempted to do. Infrastructure. Year after year, we speak about infrastructure. We have an economy which is very high on consumption, low on investment compared to China. China is just the reverse. They're high on investment and low on consumption. India needs to increase the investment part. China needs to increase the consumption part. Now, they have made certain changes, some increased allocation for infrastructure. They're increasing it by 23%. They have introduced this 20,000 additional amount for infrastructure bonds for deduction for income tax has now been continued for another 1 year. They have now said that foreign institutional investors can now invest in infrastructure bonds, and they've increased the limit, which was earlier $5 billion to $25 billion. Just to give you a little detail on that, if you look at the existing limit for foreign institutional investors investing in bond market, it is $20 billion. Out of that $20 billion, $5 billion is for residual maturity of 5 years, mainly used for infrastructure, and the other $15 billion is for other corporate bonds. Now the total amount has gone to $40 billion, where the increase has been on the infrastructure bond element from 5 to 25. Now, if you look at the numbers today, the existing limit itself is not utilized. So by increasing it, how are we sure that the existing limit will get utilized? But they have made one additional change. On these bonds, there was a withholding tax of 20%. They reduced it to 5%. So that is one obstacle why people were not investing in corporate bonds. But the more important thing, let's assume you are a company and you want to raise money for your infrastructure. As a company, you will raise borrowings at the cheapest borrowing cost. If India interest rates are high, will I borrow from India or will I borrow from overseas? So most of the corporates will borrow from overseas, in which case, who will issue infrastructure bonds? So that is first point to note. Second is that for an investor overseas, investing in infrastructure bonds, he has to consider the impact of currency. If the currency goes against him, that's an additional cost. So he may get a higher interest, but he gets hit on the currency. So that's the second aspect that we should note. Third is that once he makes an investment in this bond, he's locked for 5 years. He can trade between FI to FI, but for that you require a liquid corporate bond market for this trading to happen, which you know that we don't have a very liquid corporate bond market today. So for this to really take off, we can increase the limits. For this to take off, a lot of things have to fall in place for foreign institutional investors to get excited. In fact, there was a very nice review saying that why are we getting FIs to invest in corporate bonds? Because FI money is ultimately money which can come in and go out. Why didn't we get FDI to invest directly into infrastructure? But anyway, the point I'm trying to make is that we require a set of conditions for this infrastructure bond limit to be exhausted. Coming to financial sector, they are going to be introducing new banking licenses. They spoke about, issuing new banking licenses to more companies last year. They seem to indicate that by the end of this fiscal year, that is March, they will make an announcement on these new banking licenses. So it's left to be seen. The new borrowing program is contained, so that's keeping the 10-year yield under check. So we don't expect the 10-year yield to significantly go up. It could range between 8 to 8.25%. He has recapitalized public sector banks. Every bank has to maintain a certain kind of capital adequacy ratio. For public sector banks, he says the minimum tier 1 capital, which they call it in banks, should be 8%. He provided for 20,000 crores this year. Next year, he's budgeting 6,000 crores. Now, really speaking, there's going to be possibly a rights issue by State Bank of India. So this number itself is going to go up because they have to subscribe to those rights. So this number also could be an underestimate. He has reduced the surcharge on corporate tax from 7.5% to 5%, which is positive for bank earnings. All of them pay full tax. He has done a lot for the mass housing segment. So he's basically saying every bank has to lend to the priority sector. For the purposes of that, they have mentioned that mortgage loans are eligible for priority sector. That if you basically look at 25 lakhs as the housing amount. And equity mutual funds can now accept flows from foreign institutional investors post the KYC norms being done. Dividend distribution tax has been raised for non-individuals. This is very important. If you look at the debt market today, a lot of investment from debt market is coming from corporates who are actually parking short-term money. For them, the dividend distribution tax on liquid schemes and money market instruments, they have actually gone up from 25% to 30%. He's introduced a lot of bills. Now, all these bills don't make an immediate impact. So while there are a number of bills, etc., they don't make much of an impact. But just to give you a sense, he's looking at tabling. When you say tabling means it will go into the into discussion and may not even finally see the light next year, but it may be implemented in the subsequent year or later during this fiscal year. The insurance bill is one of them, where he could increase foreign direct investment in insurance. We are desperately in need of foreign direct investment, because if FI flows are negative, we require foreign direct investments so that the balance of payment, which I talked about, the capital account, remains strong. He's looking at the Pension Fund Regulatory Development Authority bill. If you know, we started off with the new pension scheme. It's taking time to sort of scale up. So there will be some provisions made in this bill. Banking laws amendment bill, long awaited. Today, let's assume for argument's sake, you hold 12% of shares in the bank. The bank shares, you hold 12% of the company. Your voting rights are only restricted to 10%. So there's a big difference between your ownership holding and your voting rights. The banking amendment bill seeks to align the two. That means whatever ownership you have, you'll have rights in the same proportion. The State Bank of India subsidy laws amendment bill is to be done. Today, if you want to take ownership in any of the State Bank subsidiaries, you have an ownership cap of 200 shares. And your voting right cap is only 1% in the subsidiaries, but it's otherwise 10%. So they're going to, when you make a change here, that also will go up to 10%. Direct tax code to be implemented in April 1st, 2012. This seems to be on track. They've gone through debate, etc. It has been significantly diluted from what they initially came out. The first version of direct tax code was really harsh. It would have put a lot of companies in pretty, big tax liabilities. They have diluted it significantly, but they now propose to implement it in April 1st, 2012. But the most important and reform-oriented initiative is the goods and services tax. And this, in my view, is very critical. If this happens, I think structurally, you could see our fiscal deficit coming down. There's one more change that the finance minister has made. He's suggesting that all the subsidies which are given for kerosene, fertilizers, and LPG for people who are below the poverty line will be done through direct cash transfers. This is very reformist in nature, okay? They've tried it before, they've been unsuccessful. Why it's little more probable now, possibly, is because we are implementing a unique identification program under Nandan Nilikani. So if you're able to issue unique identification numbers to people below the poverty line, and you're able to transfer this directly to the people below the poverty line who actually deserve these subsidies, then you'll find that the downstream oil companies going forward, assuming that it doesn't pass to downstream oil companies, will have lesser of the subsidy burden, number one. Number two, all others can pay the market price, but people below the poverty line will get the subsidy directly. Today what is happening is flowing through oil companies. And because it's flowing through oil companies, everybody is benefiting. Going forward, the people below the poverty line will benefit. So very targeted direction of subsidies, and all other people will pay the market price. I think that is the intent. But for that to be implemented, you should have the unique identification program being successful. Otherwise, it can't be implemented. So it is a big attempt and another transformational initiative. If it works, it's great for India. It brings down structurally the subsidy element for the country. Now, India, they say, has got triple deficits. The first is the fiscal deficit, the second is the current account deficit, and the third is the governance deficit. Okay? So now, this is a first attempt by this budget to address the issues connected with tackling corruption and governance issues. This is not the subject of the budget, but this is an attempt which even the budget is trying to provide some steps. They're constituting a group of ministers to look into how are state elections being funded. If there are corruption cases, can we have speedier processing? Is there transparency in the public procurement and contract system? And if you look at all the corruption news that you read in the press, particularly related to infrastructure, has come because the executive powers of the government have been misused. For example, the 2G scam that you're seeing is because somebody over there had executive powers which he could do to allocate licenses to anybody. The moment you go in for competitive bidding, the extent of corruption reduces. So if you look at the road sector, the airport sector, the power sector, the oil sector, all of them have come under competitive bidding. The only segment which is not under competitive bidding today is for natural resources. It's allocated. The moment you say it's an allocation and I decide the allocation, I can misuse my power. So now they're going to get that also into the competitive bidding process. So that's the way they want to address the issues on corruption. The second big issue is on the black money issue. They've got a 5-pronged strategy. India is today a member of the Financial Action Task Force. This is a very important G20 initiative which is concerned with anti-money laundering all over the world. What the government will do, it will notify jurisdictions which will not exchange information with India. For example, if there's a country A where money is coming from, but that country A is not willing to exchange information with India, then there will be very strict transfer pricing policies. Some of the payments you make to those countries will not be allowed as deduction for income tax. And all receipts from that countries, irrespective of whether it's your income or not, will be taxed as income. So it is very important that if you want to get the tax benefits for all this, you need to basically be in a jurisdiction which will share information with India. So this is a big change. They have concluded discussions with 11 tax information exchange agreements, so they've already done these discussions to make sure that they get information from where this money is coming from. 13 new double taxation avoiding treaties, and also they are revising the provisions of the existing double taxation agreements. So this is going to be very key. So if money is coming from jurisdictions which are not willing to share information, it's going to be a problem as far as the taxation, transfer pricing, etc. is concerned. Now the sectoral impact. At the outset, let me tell you, never use budget sectoral impacts to invest in stocks, because stocks get influenced by factors which are outside the budget. I'm only presenting this just to show you how different sectors have been impacted. In fact, because there's been no material change in the excise duty rates, no material change in the customs duty rates, the impact on sectors is relatively limited. There are a few big changes which have happened in two sectors. One is that taxation of SEZs, and second is export duty on iron ore, which has basically had major impact. The rest of the impacts are like marginal. They have a negative, neutral kind of a thing, but it's not something which is very big, which can influence the direction of the stock prices. If you look at automobiles, no change in the duty rates was the positive news, because everybody expected that they'll do something on increasing, excise duties, etc., particularly on diesel vehicles. That's not happened. And auto sector always benefits from the agricultural credit, which is expected to grow by about 26%, and also the Nadiga program, which is still maintained at 40,000 crores. On cement, they have actually said that they will now charge excise at 10% ad valorem duty plus a 160 rupees per ton, against earlier it was 10% on MRP. Now they're going to charge 10%. It will be, in my opinion, more on the ex-factory price, and another 160 rupees per ton as a specific duty. Not material change, actually, very marginal negative.